I'm with Dominic from Binari Property, Head of Research at Binari Property today, talking about the Sydney property market and how it's looking for 2026. I suppose there's that when we look at from purely an investment perspective, which is what we're talking about today, property investment.
Yep.
There's in any market, there's markets within markets, and that's certainly the case in a metropolitan area like Sydney.
Yep.
Sydney does have that border of the coast on one end, the Blue Mountains in the other, and then the national parks either end.
Yep.
And notwithstanding that's quite a big difference between other areas such as the Gold Coast, it does play into that limited land supply.
Yeah.
So just give us a brief summary on where the Sydney market has been over the last 12 months and what's driving the market over the next 12 months.
Look, Sydney has traditionally always been quite strong and will remain that way. It's always going to be probably the most expensive city we've got in Australia. But last 12 months has kind of been on trend. You know, the previous 3, 4, 5 years through the pandemic and after the pandemic, we saw some of the other cities really outperform Sydney. Sydney still saw growth of around sort of 30-odd%. Yep. And it's kind of been the same whilst those other cities got sort of up to 70% during those timeframes, and Sydney was kind of half that. The last sort of 12 or so months have been the same. You know, Brisbane, Perth and Adelaide have been quite strong, sort of 7, 8, 9% annually over the last sort of 12 or so months. And then Sydney's kind of been around the more normal levels of 3 to 4% kind of thing we've seen. So it's always going to be a strong market. It's a lot more expensive than the others. I would say that's probably playing into it a little bit. You know, the affordability constraints when you're in a city that is, you know, income differentials aren't that wide between, say, Sydney, Melbourne and Brisbane, but property prices are quite drastically different. So it's probably led to a bit more of it's hard to say subdued level of growth because it's still seeing relatively good levels of growth, but more subdued than maybe what's being seen in other markets.
Right. So is it, for a property investor's perspective, given that large price disparity compared to, say, the Melbourne market and probably less so in the Brisbane market, should an investor be looking at something that's maybe smaller in size, maybe a one-bedroom apartment? I know in some areas of the eastern suburbs you've got studios that, in terms of rental returns, rent quite well. Yeah. Should they be looking at maybe a one-bedder versus a three-bedder for investment, where in other areas you can get a three-bedder, particularly in Sydney, the price of a two-bedroom apartment?
Yeah. Yeah, I think one of the challenges people have is with the amount of money it costs to buy a studio or a one bedroom. It's a kind of a hard thing psychologically for them to get their head around, you know, spending $1 million potentially or more or slightly less to buy something that feels, you know, quite limited in terms of who it can appeal to. And then looking at what that money can get you elsewhere has probably led to a lot of investors turning their attention outside of Sydney. But as an investor, one of the challenges with Sydney is that in the housing and the townhouse and the larger apartment markets, the rental yields are relatively low relative to what we're seeing in other markets. So I think that would, if you were quite cash flow conscious or quite rental yield conscious, you would probably be more likely to find the smaller and cheaper properties to be the ones that would probably better deliver on that front. But then obviously you do fall into the markets of being in properties that are maybe not so scarce, and there is a bit more potential for supply. I mean, we recently saw with government change to some zoning around areas that are within certain distances from train stations and things like that to bring on new supply. Typically the supply that's brought on is new apartments. So through limiting yourself to those, you know, smaller dwellings or apartment type dwellings, you do then tend to have a bit more competition, which can impact your performance, your capital growth, and so on and so forth. So I think that is what has led to a lot of people looking outside of Sydney in recent years. Yeah, I
think also, is it true to say from an investor who's purchasing in an apartment complex, ideally look for a complex where it's ideally, even though you're looking for investment, there's a predominance of owner-occupiers in there?
Correct, yeah.
Is that correct?
Yeah, I think that's really important. I mean, the reality is that when you buy apartments in areas or in developments or complexes that have a higher proportion of investors, higher proportion of tenants, what you'll tend to find is that your apartments don't tend to be looked after as well as what they might be if you had a complex that was predominantly made up of owner-occupiers. Right. So trying to find properties that are in more owner-occupier dominated areas, trying to find properties that are in complexes that are more owner-occupier dominated will always make them a bit more attractive for resale down the line. Probably doesn't change too much from a rental point of view because rents are pretty hard to come by and there's very low vacancies across the board at the moment. But definitely from a resale and capital growth point of view, buying those types of properties are going to be better for your long-term prospects.
Versus the potential high-rise apartments are going to be popping up around metro stations that
correct. Yeah.
potentially might have a lot of investor content there.
Yeah, and I think initially they'll do really well because of the improvement to connectivity and things like that. It'll just be that down the line, when there is that ability to bring on more and more supply, it can hurt that potential growth. I mean, we've seen in areas where they may not have had a metro station, but places like Parramatta, Liverpool, so on and so forth, where people have bought apartments for an investment because of the pricing accessibility and the rental returns, but the capital growth prospects just haven't been there. Whilst houses have doubled in value, some of those apartments just haven't really moved simply because there's so much supply of the similar kind of product. So I think initially buying near a metro, you'll probably see some pretty early uplift, but if things continue to trend the way they are, where those key transport hubs are seen as a good place to bring on new supply, then it just does mean more competition.
Right. Okay.
Yeah.
Well, I think it's the flip side of that is the convenience that these metro stations and or existing train stations. I was speaking to someone the other day who used to travel in from Epping, and it was like 50 minutes. I think whether it was in a car or whatever it was, and now I think they said it's 19 minutes door to door, which is just a transformation of your day, right?
Correct.
You have another hour or more in your day.
Yeah.
So I think that's also going to sort of support the prices in those areas.
Correct.
Just comes down to rental as well. Depending on your investor. Needs of investors.
Yeah, and I think price point, I mean, obviously they're not, even those areas aren't necessarily cheap now. I think the growth in a lot of those areas that do have the metro, there's a lot of it's been had from when the metro was kind of announced. I know, like, for example, you look at places like Five Dock, which were not cheap initially, but are going to benefit from a new metro line there. And pretty much as soon as it was announced, every real estate advertisement outlines the fact that it is nearby the new prospective metro. So a lot of that growth has sort of probably been experienced. It will continue, no doubt. But I think it's just Sydney's a hard one because the budgets that people have available don't often allow them to get into the areas where we would see them as super desirable places to invest.
All right. Well, Dom, thanks for your insights on the Sydney property market for 2026.
No problem. Thanks, Grant.